The paradox is simple. The fastest way to improve results is to slow your trading to the pace of time itself. W.D. Gann did not chase price. He synchronized with it. His square of nine is not a lucky wheel. It is a master clock, a mechanical way to align vibration and price with windows in time. Crowd belief says movement creates opportunity. Gann's belief says order creates movement. Time dominates price. Prediction yields to confirmation. We anchor to a law. Harmony appears when proportional relationships repeat. The square of nine arranges numbers by rotation. When a price rotates back to a degree that echoes its origin, 90, 180, 270, 360 order emerges. Professionals observe these harmonics. The crowd reacts to bars. The enemy is impatience, the compulsion to act without a time-price confluence, the boredom that forces trades. FOMO is an illusion. The cycle returns for those who wait for it. If this resonates, stay with me. Gann paired the square with a 1x, 1 angle time and price in balance. He treated the angle like a metronome. When price respects it, trend is orderly. When it overbalances, a change is brewing. The rule is impersonal. First, define your base price, then project square levels and degree windows. Next, require a secondary test price, revisiting a level on lighter volume. Only then confirm with a swing chart reversal or a clean crossing of an old level. Prediction tempts. Confirmation protects. Stops are mechanical just beyond the tested level. Risk is measured. Entries are earned. Mastery feels quiet. The chart slows. You wait for confluence, a square level, a time window, reduced volume on the retest, a swing confirmation. Boredom becomes a tool. Discipline becomes identity. The market rewards those who observe. If the key is to wait, what exactly are we waiting for? Not price alone, and not time alone, but their agreement, one more test, one more measured pause, before the move that belongs to you. Price does not travel in straight lines. It rotates. Gann Square of Nine makes that rotation visible by turning numbers into a spiral clock. Place one at the center, then wind outward in a measured spiral. The cardinal lines, the 0, 90, 180, and 270 degrees, cut through the spiral like axes on an engine block, producing definite points where vibration changes state. Professionals treat these axes as law. The crowd sees support and resistance. The square defines geometry. The principle is simple. Convert price to its square root, advance by angular increments, then square back to obtain harmonic targets. A 180-degree move is square root p plus 1, 2. A 90-degree move is square root p plus 0.52. A 45-degree move is square root p plus 0.252. A full rotation 360 degrees is square root p plus 2. These are not forecasts. They are levels where the vibration expects a test. Rule: when price reaches a cardinal or fixed cross, observe, not react. Confirmation beats prediction. Define the enemy: linear thinking and emotional urgency. Impatience forces trades between harmonics, where noise dominates. Discipline waits at the angles. Law: angles organize chaos. The 45-degree line functions as a balance line. Sustained closes above it imply orderly advance. Sustained closes below it imply measured decline. Crossing old levels at a harmonic price strengthens the signal. Failing to cross weakens it. Operational rules: map the square. Pre-compute the next 45, 90, 180, and 360-degree levels from the last confirmed pivot. Use a swing chart to define that pivot. Note overbalance if the current reaction exceeds prior corrections in time or price into a harmonic level. Expect a change of trend. Psychological resolution: boredom becomes method. Waiting becomes work. The chart becomes a clock. If geometry identifies the where, what defines the when? In the next step, the spiral meets the calendar, and confluence replaces hope. Most traders separate time from price, but Gann fused them into a single vibration. The square of nine gives you the price squares. Cycles give you the time windows. Confluence begins when a market is approaching a geometric price, say a 1x, 2x, or 3x rotation from a prior pivot on the square while entering a measured window, 30, 45, 60, 90, 180, or 360 days from a significant high or low, or an anniversary week of a prior swing. Add seasonality, equinox, and solstice turns, first trading days of quarters, and you create a frame where odds compress. The enemy is fragmented analysis, price signals without time, time dates without price. The rule is binary: no time, no trade, no price, no trade. Define the zone: price within one rotation or a cardinal angle 90 degrees, 180 degrees, 270 degrees, 360 degrees of your square level, and time within a narrow window, often plus or minus 3 sessions around the count. Behavior confirms the geometry. Into the window, volume frequently contracts, range is narrow, a swing chart shows overbalance in time relative to the prior counterswing. Watch for a probe that crosses old levels and fails back through the square price, or a spring, uphust that tests the zone and reverses. Accumulation versus distribution clarifies. Accumulation turns show exhaustion down into time. Distribution turns show exhaustion up into time. Operate rule-based. Require at least 2 time agreements and 1 precise price square. Demand a recognizable pattern. Risk from beyond the level that invalidates the geometry, not from emotion. Patience turns boredom into edge. Confluence is not prediction. It is permission to observe with discipline. When price meets time, your job is to wait for the market to declare intent. The window opens, the level is touched, the reaction appears, yet one test still remains. The crowd treats the first touch of a level as destiny. Gann treated it as inquiry. After a time-price confluence prints, the initial spike is a probe, not a verdict. Prediction invites emotion. Confirmation invites order. The enemy is urgency, the reflex to trade the first reaction, mistaking noise for decision. Professionals wait for the secondary test, where intention replaces appearance. In accumulation, price will cross an old level, recoil, and return on lower volume to test supply. In distribution, it will retest demand on thinner bids. The law is symmetry. Harmony appears when the retest shows overbalance failure. Practical rules are definite. Require a secondary test that occurs within a defined window of the signal, 1 to 3 swings, approaches the level with reduced range and volume, and produces a swing chart reversal through the test bar's midpoint. In bullish setups, demand that the retest holds a higher low against the first reaction and closes above the calculated square or angle. In bearish setups, require a lower high and a close below. If volume expands into the retest, treat it as continuation, not reversal. Place risk beyond the test's extreme. Size position so a routine loss does not disturb discipline. One more check. Measure. Overbalance. If the counter move exceeds the prior adverse swing in both time and price, the setup is invalid. Waiting is not empty. It is measurement. Boredom becomes capital when you let the market finish its sentence. The secondary test creates binary clarity. Acceptance or rejection, accumulation or distribution. You act only when 2 or more confirmations agree. This rule-based patience turns anxiety into arithmetic and turns false breaks into information you can count. Yet even after the test, one question remains. How do you train the mind to sit still long enough to let geometry truly speak? The method is only as strong as the mind that applies it. After learning to wait for secondary tests and rule-based confirmations, the final discipline is internal. Detach from outcomes and execute the plan as if you were a steward of a machine. The paradox is simple. Freedom in markets comes from constraint. When your risk is predefined, your entry is conditional, and your exit is mechanical. Emotion loses jurisdiction. Boredom replaces excitement, and the account grows during long stretches of deliberate inaction punctuated by brief, decisive actions. The enemy is internal agitation, FOMO during quiet accumulations, impatience during slow distributions, revenge after a small, ordinary loss. You answer it with a checklist. Risk per position is fixed. The stop sits beyond the invalidation of the geometric premise. Position size derives from distance to the stop. Add only on confirmed structure, never to repair emotion. The square of 9 gives levels. Your plan gives behavior. If price touches a calculated angle inside a valid time window, and the secondary test prints on reduced volume with a favorable swing configuration, you act. If any component is missing, you watch. Losses are not verdicts. They are system costs. Overbalance against your position is not an insult. It is new information requiring recalibration. The moral principle is firm. Protect capital, so time can work in your favor. The trader's temperament mirrors the geometry, measured, orderly, harmonic. In practice, that means journaling every trade in the same structure, recording the window, the level, the test, the confirmation, and the emotional state. Over time, the journal becomes your personal square, mapping the vibrations of your behavior. Mastery feels quiet. Signals appear, you confirm, you execute, you sit. The market does its work without your commentary. The next chapter simply names what you are already living, a creed that reconciles law and patience into one steady habit. The final paradox is simple. The stricter the law, the wider the freedom. By submitting to geometric truth, the trader is liberated from emotion, noise, and illusion. The Square of Nine ceases to be an exotic device and becomes a master clock, aligning price with time in an orderly vibration. You no longer ask, what will happen? You ask, which law governs here? The answer is definite. Confirmation over prediction, time over excitement, confluence over impulse. When price reaches a calculated square within a time window and the secondary test appears on reduced volume, you execute. When swing charts fail to confirm and overbalance unfolds against you, you step aside. This is not caution. It is mechanical strength. Identity shifts from crowd participant to professional observer. Harmony replaces argument. The engine is rule-based. Determine cycle windows by anniversary, season, and measured counts. Compute price octaves by angles and squares. Wait for the crossing of old levels to be tested. Seek the secondary test. Confirm with swing structure. Size risk by geometric distance to invalidation rather than by hope. Losses become tuition paid to natural law, not wounds that demand revenge. Boredom becomes productive accumulation of attention rather than trades. Exhaustion fades when you stop wrestling with randomness and begin aligning with rhythm. The creed is brief and binding. Time dominates price. Wait for the window. Price obeys angle. Calculate the level. Confirmation beats prediction. Require the test. Risk is geometry. Define the line. Patience is profit. Inaction is action. Trade the confluence, not the headline. Exit on violated law, not violated ego. Mastery is measured, not declared. From here, deepen your study in 3 directions. Refine cycle recognition across scales. Sharpen the mechanics of confirmation, and codify risk with precise, repeatable geometry. The trader's path is not louder. It is more exact. Live by the law, and the law will carry you.